Ladies and gentlemen, good day and welcome to the J. Kumar Infraprojects Limited Q2 and H1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Before we begin, a brief disclaimer. The presentation which J. Kumar Infraprojects has uploaded on the stock exchange and their website, including the discussions during this call, contains or may contain certain forward-looking statements concerning J. Kumar Infraprojects business, prospects, and profitability, which are subject to several risks and uncertainties, and the actual results could materially differ from those in such forward-looking statements. I now hand the conference over to Mr. Kamal Gupta, MD at J. Kumar Infraprojects Limited. Thank you, and over to you, sir.
Hello. Good afternoon, everyone. This is Kamal Gupta. On behalf of J. Kumar Infraprojects Limited, I warmly welcome you all to our Q2 and H1 FY26 earnings conference call. Joining me today are Nalin Gupta, Managing Director, Mr. Vasant Savla, Chief Finance Officer, and our Investor Relation Partner, Marathon Capital. I trust you all had the opportunity to review our earnings presentations and press release available on the stock exchanges and our corporate website. As we close the first half of FY 2026, I am encouraged by the steady progress we have made and the resilience our team continued to demonstrate. Despite a heavy and extended monsoon, this has been a period of balanced performance, one that has strengthened the foundation for a stronger second half and for the years ahead. Our order book remains solid, execution velocity is improving, and our capabilities across key verticals continue to evolve. In a demanding and highly competitive industry, our continued success is a direct reflection of our resilience, agility, and engineering excellence that defines J. Kumar. Where others see complexity, we see opportunity. Technically demanding, first of their kind projects are not obstacles. They are catalysts that push us to innovate, adapt, and lead. Our proven ability to consistently qualify for, win, and execute landmark projects speaks volumes about the strength of our technical team and our organizational depth. With the strength of our people and the clarity of our vision, I am confident that the best chapters of our growth story are still ahead. Now, coming to the financial performance, the consolidated performance highlights for H1 FY26 are the revenue from operations for H1 26 grew by 10% to 2,826 crores as compared to 2,574 of the preceding year. The operating margin for H1 26 grew by 10% to 411 crores as compared to 373 crores in H1 of previous year, and the EBITDA margin stood at 14.6% as compared to 14.5% in H1 of the previous year. PAT for H1 26 grew by 10% to 195 crores as compared to 177 crores in H1 of 25, and the PAT margin stood at 6.9%. Total order book as on 30th September 25 stood at 20,160 crores. The order book includes metro projects contributing around 13%, elevated corridors, flyovers contributing around 53%, road and tunnel projects contributing around 17%, and other building and civil works contributing around 17%. We can now begin the question and answers. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Sen from FinDoc. Please go ahead.
Hi, thank you for the opportunity. Hope I'm audible.
Yes.
The first question is about the order inflows. Can you throw some light on the quantum of orders that is in the advanced stages or in the L1? And will we be able to sustain our target of approximately 4,000 to 5,000 of inflow for the financial year? And are we seeing any headwinds in terms of industry level headwinds in terms of order inflow?
So, Aditya, we have already secured around like 150 crores of projects, and we are L1 in 1,200 crore of a convention center in Lucknow. So we are expecting these orders very soon. And of course, we are very confident of like the inflow of around 5,000 to 6,000 crores of projects in this FY26. So like ensuring that like we have a closing order book of around 20 to 23,000 crores by March 26. Yes.
All right. And it's a rather a macro level question that there's no industry level headwind that we are seeing. Is that correct?
No. We don't see anything.
All right. And there was some decline in the execution. That's a minuscule. So was that because of the extended monsoon, or were there some other reasons for this?
Yeah. So if you see, the monsoon this year has started also early, and like, till October, it in fact, the rains were there. That affected the top line of the organization for this. That was the main reason.
But overall, if you see, there is still a growth of around 10%.
11% in H1. Yeah.
Understood. I'll call back in the queue.
Thank you.
Thank you. The next question is from the line of Diwakar Rane from Prudent Equity. Please go ahead.
Hello. So my first question on the growth part only. So, sir, are you maintaining the 15% growth guidance for FY26?
So we are expecting a growth of, we had given a guidance of around 6,500 crores in our previous call. So we would say that still we'll be striving our best efforts to achieve that, but we expect that we should surely be able to achieve a target of around 6,200 to 6,300 crore, looking at the current situation of H1. So, but still it will be a growth of around 11% on the overall year-on-year basis.
It will be around 10%.
Around 11% on a year-on-year basis.
Okay.
Yeah.
So this is because of the bad Q2, right? The growth.
Because as you would appreciate that usually the Q2s are the lowest quarter of the year. And in this year, we had a much heavy rainfall as compared to with the early start and getting extended till October end. So because of that, the execution, because it's totally on the job site, it's not a factory-based execution. So it has an implication on the top line. But we will be trying our best how we can cover up the growth in the top line in this coming H2.
Okay. And sir, what is the total amount of orders that we have bagged in H1 of this financial year?
So as we answered before, it was around 150 crores of orders that we have bagged in H1 till now. And there is around 1,200 crores of order which we have recently, we are L1 last week. So, and there are some orders that we are bidding. Even today we are submitting a bid. So we are very hopeful that we should be able to achieve a target close to like 5,000 to 6,000 crore order book by the end of this closing year.
Okay. So because, the for EPC companies, the orders has been slowed in last financial year. So assuming
Mr. Diwakar, I'm with you on that. So there is some slowdown, but still working pan-India in 7 states, we are still hopeful that we should be able to bag orders of around 5,000 to 6,000 crore in this year closing.
Okay. And sir, this how much money you plan to raise in this QIP?
So QIP is just an enabling resolution that we are taking approval of. But we will take this call when the appropriate time comes and looking at the market situation. So I would say this is like, it would be little premature for me to reply to that.
So we are expecting some new big orders. So like, at that time, probably we'll go for it.
Okay. So as of now, there are no plans. It is just a resolution. I think you passed this last year also, right? In FY25.
We had passed it last year also.
Yeah.
So it is just an enabling resolution to continue that. Being in preparedness, depending upon the order book and the requirements that the company has. So as of now, no immediate plans.
So let's say if you get an inflow of 5,000 to 6,000, then you will go for a QIP. Otherwise, you will not.
It all depends upon the nature of work that we bag, means whether how capex oriented it is, what is the working capital requirement. So it is a very it's a very dependable discussion. But yes, we are keeping ourselves in preparedness to be ready for it, but with no immediate plans, to be precise.
Okay. Just two more question on the balance sheet part only. So, there is a CWIP of 292 CR in this quarter. Yeah. So, can you explain the nature of this?
So basically, majority of it comes in from the GMLR tunnel boring machine that J. Kumar has purchased. The TBM is, as we had explained and clarified during the earlier calls as well, that we have purchased two tunnel boring machines, one in our books and one in NCC. So J. Kumar's TBM has already reached the job site, and that's how that capex figure has gone up.
So it is actually under assembling right now. So once it is assembled and put to use, it will be capitalized.
So, so there is a cash outflow of around 385 crores. So this is completely pertaining to this TBM?
No, there is
cash
no
flow statement. Yeah.
No, 385 is not fully for this because it is partly on a deferred credit basis.
Okay. Okay, sir. That's all from my side.
Thank you.
Thank you. The next question is from the line of Dhananjay Mishra from Sunidhi Securities. Please go ahead.
Yeah, am I audible?
Yes,
Yes,
Dhananjay.
So, just wanted to know, as you are maintaining this 5,000 crore order inflow, so can you tell what is the bid pipeline and which all order are expected to be finalized in this financial year?
So like recently, today we'll be submitting a bid for a BMC flyover and also a river bridge. So that is around 2,250 crores approx, which will be submitted today by the end of the day. Again, Delhi Metro has come up which for a project of metro, which is around 2,500 crores, which will be submitting. The bid date will be somewhere by the end of this month. So that is one tender again of 3,000 crore approx that we'll be submitting. And there are various flyovers, elevated corridors and some water projects, water tunnel projects that we are expecting. So altogether around 25,000 crores worth of projects is what we are expecting to bid in H2.
Okay, so these are all fresh bid you are going to submit, and as on today, any bid already submitted which has to be finalized?
Yeah, so there are, as we have told, we are L1 in one of them in the 1,200 crore project, and the bids submit 2,000 crores worth of project is what we have submitted, and we are expecting, we are waiting for the outcome of it.
And also this working capital, we have seen slight improvement in H1. So how do you see it going ahead, or closing basis, year closing basis, how do you see working capital?
So working capital will be at more or less this level or maybe another 50 crores here and there. So if you see in financial year 25, it was 696 crores. And now it is 775 crores. So more or less it will be around this range, 800 crores or so.
And we intend to maintain a working capital of like 120 to 130 days.
Okay. And lastly, your capex till date and full year capex target. Thank you.
So capex for H1 is, as already mentioned before, 398 crores. And like, as we have been saying, like we require around 100 crores of maintenance capex every year. And for these two projects of GMLR and Chennai, we intend to do a capex of 500 in 2 years. So let's say if 400 we have done this year, so around 2 years next year. So like this couple of projects of new like VDCR, GMLR and Chennai.
So overall capex for this year will be closer to 500 crore, including this 100 crore.
Correct, Max. Right.
And next year it may be about 350 crores.
No, next year will be around 200 crores.
200.
Yes.
Okay, that is all from me. Thank you.
Thank you.
Thank you. The next question is from the line of Vaibhav Shah from JM Financial. Please go ahead.
Yeah. So wanted to get an update on few of the big ticket projects. So how is the execution going on in Chennai Elevated Corridor project?
So Chennai Elevated is going on full swing. The casting yard is fully operational and the segments are going on well. The foundations piling, we have completed around 45% of the piles, and the substructure, pier, everything is on, it is in swing. So there is no hindrance as such. Apart from the monsoon, Chennai has some extended monsoon of south, November and December, this October, November, December. So it is there. So, but the work, apart from the river portion, we are doing on land. So there's the yard, precast yards and all, you can go ahead, no problem. So the work is going in full swing in Chennai.
So broadly, how much we would have been executed already?
Sorry?
About
Chennai.
How much high in Chennai?
Individually, I may not have the figure right now, but my people will pass on you the figures. No worries, Mr. Vaibhav.
Okay. So secondly, the project that we have won recently in the last 12 odd months, so have execution started in those projects? Like a CIDCO project of 1,000 crores and MMRDA project we won last year in August. So in those projects, execution has started, and also on NBCC couple of projects?
Yeah. So, CIDCO, the 1,020 crore project, that is not started yet. We are just awaiting for the environmental clearances, which is expected in this month only, November. So I expect it to start by next month. The MMRD project of Anandnagar Saket, which is 1,800 crores, is already started full swing, and the revenue has started pouring in. The piling has started, pile caps have started, piers, and so all these works are already started in MMRD project. The NBCC project of Silicon Valley in Noida, even that has started in full swing, and the revenue has started pouring in from that as well. And VDCR
also our GMLR project of the tunneling that we are doing, the TBM has reached the job site. We have already casted more than around close to 700 rings that we have already casted at the casting yard, and also the excavation of the main shaft that's required to lower the TBM for driving it inside has also been happening on a regular basis on a full swing. So we have already done the tree cutting, and the excavation is going on in full swing. So the project is in proper control as we speak.
So in the Goregaon GMLR project, so can we expect somewhere around 20% execution in the current year?
So we cannot give you that exact number, but in the current year, we are only talking of 4 months has been balanced. So 4 to 5 months. So in this, 20% would be too optimistic, I would feel. But yes, the work, because the main revenue comes in when the tunneling starts. So as of now, expecting that huge figure will be unpractical, I would feel. But from the next year onwards, there will be a substantial revenue that should be contributing to the top line.
Okay. Thank you, sir. Those are my questions.
Thank you very much.
Thank you. The next question is from the line of Aditya Sahu from HDFC Securities. Please go ahead.
Hello. Hi, sir. Am I audible?
Yes, Mr. Aditya.
Hi, sir. Thanks a lot for the opportunity. I just wanted to get an update on the margin guidance. What are we guiding for the FY26 in terms of EBITDA margin?
In H1 also, as you must have seen, we have done a EBITDA margin of 14.6%. So we'll be able to maintain this 14 to 15% of margin in this year as well. There's absolutely no issue. And going forward also, we are intending to go a percent notch higher and trying to do it in 15 to 16% in coming 2 years. Also, if you see the PAT, which is around 7%, we'll be able to maintain that as well.
Okay. So more or less, we are maintaining our guidance on the revenue and the PAT margin guidance that we had given in the Q1 too.
Absolutely, 100%. So because these are some secured order book what we have, Aditya, which are with the secured margins.
Right, sir. Understood. In the TBM, you have mentioned that the TBMs are in place. So we are not expecting any more capex on the TBM front at least, or are we expecting any more capex on that front?
No. So as I mentioned, the TBM is already here, and we have paid part of the money, and the part money is on deferred payment system because you have taken a term loan on it. So there is no major, other than some small ancillary equipment, there is no major capex as such which is expected.
Okay. So whatever CapEx that we are planning of about 500 odd crores, including the 100 crore maintenance CapEx, that is going to be ex of all TBM in terms of that.
Because the other TBM will be in the books of NCC.
NCC, yeah,
So
right.
our part is more or less done, you can say.
Understood, sir. The CapEx that we plan to do, are we planning to fund it via debt too, or is it going to be completely from the internal accruals?
So as we have mentioned, we have taken a term loan to fund that CapEx, and then the project...
The previous one, yeah.
I'm sorry?
The previous one, you're saying the TBM one, term loan that you have taken. So
Yeah. So TBM 2 will be the responsibility of NCC. So J. Kumar has nothing to do with it.
Okay, but additionally, we are not planning any more debt for the CapEx that we are planning to do.
No.
Understood, sir. And so if you can help me with what would be the debt level that we are planning, the peak debt level, if I must say.
So around 775 is our current gross debt.
Right.
And but at net level, we are 124 crore negative.
Understood. And okay, I think yes, I think I had other questions. I think those have been answered in terms of bid pipeline. Sorry, in case I've missed, if you can help elaborate the bid pipeline. What does it comprise in terms of the bid pipeline that we have?
So as we have mentioned that we are looking at an order book close to 5,000 to 6,000 crores in the current year, and out of which around 150 we have backed till now, and 1,200 crore we are L1 for a project at Lucknow, which we have mentioned. And there are some bids that are in pipeline. We have already submitted projects worth around 2,200 crores for which the financial bid has to open. And today also we are submitting a bid of 2,000 crore plus. So altogether 4,000 will be till today that we have submitted, and another 25,000 crore in coming 6 to 9 months that will be bidding in this year.
So 25,000 would be the bid pipeline for the remaining H2 for H2 F26.
Very correct.
Understood, sir. Thanks a lot for the questions. Thank you.
Thank you very much.
Thank you. The next question is from the line of Shubham from RV Investments. Please go ahead.
Oh, hi, sir. Am I audible?
Yes, Mr. Shubham.
Sir, I want to know what's your order win ratio? Like you have said that you will bid for 20,000 to 25,000 crores for order this year. So can I know the probability that what's your past win ratio of orders?
Around as we told, if you consider that way, 25,000 will be around 20%. Correct?
Okay.
And as we told before, this year we intend to take a order inflow of around 5,000 to 6,000 crores, thereby maintaining a order book of 22,000 to 23,000 crores by the year end.
Okay. And can I know what's your net debt target for the FY26 year end?
Right now we are at 770, so it will be similar to 800 crores.
Okay, sir. Thank you.
Yes.
Thank you. The next question is from the line of Venkatesh Subramaniam from Organic Capital. Please go ahead.
Hi. I must congratulate the team for very, very consistent performances. I just had a couple of bookkeeping questions. We are sitting on almost about 3 years of order book. How do we maintain margins in a fairly inflationary atmosphere? What are the kind of things for which you will have escalation taken care of, and what are the kind of costs that we will need to bear?
So, Mr. Venkatesh, as you have rightly said, firstly, all the contracts that the orders that we have backed of around 21,000 crore odd is coming in from all EPC contracts which are covered under the price variation and escalation clauses. So even if the tenure is 3 years, 4 years or 5 years, the increase and decrease is fairly covered under the price variation clauses. So that's how maintaining, and once you bag an order, the margins are already secured. It's not it's the margin at which you have bid it. So it's a secured job with a 14-15% EBITDA margins on an overall basis. So there is no chance of any major variation happening onto the already backed orders.
Mr. Gupta, on things like materials, steel, etc., you probably can have escalation clause because you can kind of index it. But there is actually there are things that probably may not be covered, like manpower costs and a few other things, etc. So what has been your past experience and how do you kind of cover it?
So firstly, let me explain you the price variation clause is not only for steel and cement. It is having a overall percentage distribution where it covers the steel part of it, cement part of it, labor, POL and others. So it is not only on the steel and cement, but labor and even the fuel, the POL part of it is also been covered. So there is, and our overall experience has been in this past 45 years of our company's experience and our experience of more than 30 years, that it is fairly covered with the price variation and escalation clause. So
your numbers kind of reveal it. Fair enough. Yeah, fair. And you as against your gross debt of about 750-800 odd crores, what is the quantum of mobilization advance that we're sitting on, and what part of it is interest bearing?
It's around 900 crores.
In addition to 800, you have 900 odd crores of mobilization?
Yes.
And all of it is interest bearing, and at what cost?
No, not all is interest bearing. There is about 500 crores is a interest bearing mobilization advance.
And did we hear you say that our net debt is negative 150? What did you?
Yeah, that's right.
124 crores.
Right. Just a follow-up on that. If this is the kind of debt that we're sitting on, why would you want to dilute with this level of valuation? Meaning you would realize that we are not getting valued well enough. Why would you want to dilute at these kind of valuations? And we have enough headroom for borrowing, right?
Mr. Venkatesh, that's the reason why last year also we had a QIP approval that we had taken from the AGM and from the board, but we didn't go for it. So it totally depending upon the order book, the nature of work, like the huge capex that we had for GMLR Chennai and the coastal road projects. So that's how we could manage. So we didn't go for the QIP. So this is just an enabling resolution that we are getting it passed. And even in one of our previous friends have asked this question, wherein we have clearly replied that we don't have any immediate plans to go for it. And it is it would be based on the opportunities that of the orders we bag, of the working capital requirement, based on which we will take that call. So immediately there are no such plans. We fully agree with you, and that's how we have not planned anything immediately.
Fair enough. Thanks a lot.
Thank you, sir. Thank you very much, Mr. Venkatesh.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi. Thank you, sir. Sir, first, though we are broadly saying that we are maintaining our revenue guidance, but slightly in a way when we are lowering. So previously from 6,500 to 6,600 crore to now 6,200 to 300 odd crore. So if I broadly calculate that in the second half, we are looking at 11 to 12% kind of a growth. So still, till now, are we facing in terms of monsoon or labor related delays or any project specific delay? What's the probability that we can reach to a 6,500 crore kind of a number?
So Shravan, as you are aware, this year the monsoon has extended till October, in fact. Okay, so we just want to give a conservative figure. Okay, and as you know, we always intend to do more than what we say. So that's why we are giving a target of 11% growth, around 11%, that is 6,200 to 6,300. And all the projects, there is absolutely no worry of whether labor or equipment. Of course, this external factor of rains and all, not, so Because of that, the targets are lower. But like if you see, we are going like year-on-year basis, it is 7% upside only.
Got it. And then let's say going forward, kind of previously we were looking at, and if this year base itself is a low 11%, then from next year onwards, can we look at 16-17% kind of a growth for at least? Obviously, that also has to be supported by the order inflow. But broadly, that broader thought growing 16-17% for a couple of years is intact.
So that is our aim also, Shravan, to and we intend to grow at 16-17% going ahead. And I think because of these GMLR tunnels and all, the inflow will be much faster. So that will help us to do this.
Okay. And on the order inflow front, sir, so already 1,350 odd crore we have received, and still even we were previously looking 6,000 crore. Now we are seeing 5,000 to 6,000 crore. So even there, I would have expected we could have even said 7,000 crore plus. Rather we have lowered to 1,000 odd crore. So just trying to understand. So is there any big, even also you can specify this 25,000 crore, which other major big project, Daisar Versova, Daisar Virar project or any where we are looking at, and what could be the size?
So Shravan, if you see, we are giving a tentative range of 5,000 to 6,000 crores. What happens? These are in DPR stage. Okay. So the projects, if it comes immediately, we bid immediately, you can get more also of that. Okay. So if these projects are a couple of months, they are pushed ahead in bidding, so it goes to next year. All right. So the whole thing is, it's not that we are giving a range of this 5,000 to 6,000 crores. Maybe it is 5,000, maybe it is more than 6,000. It depends if we are this Virar to Uttan, that project is coming, so it comes on time, it's bidded on time, and they do it on the fast forward thing. The order inflow will be much faster. You understand? So for us, what is important is profit and bottom line. And we are trying to maintain that. So we always want to take orders at our own margins. So that's more important to us.
Okay. So there, just wanted to understand where we think this whatever the big projects which are talked in the newspapers, if you can highlight, and in terms of the timeline, when can you see the tenders coming for them?
See, as you say now, we have diversified in multiple geography also and multiple verticals also. So, as we have already bidded for around 2,100 crores, and we are today bidding for a river bridge of around 2,000 plus crores. And we are intending to bid for another 20,000-25,000 crores in various verticals of buildings, towers, metros in different geography. Hello.
Okay, got it.
Yeah,
got it. Lastly, sir, just a data point on the balance sheet front, retention money and unbilled revenue.
1 minute, there is a lot of disturbance in the background. I don't know where is it coming from. So,
sorry, sorry, sir, it is from my side. So, wanted a retention money and unbilled revenue number as on September.
So unbilled is about 695 crores and retention is about 389 crores.
389?
Yes.
Okay. And mobilization, you said it is 900 crore.
900.
Okay. And then
695. Mobilization advance you have asked or what you have asked?
Yeah. The mobilization advance, just wanted a exact figure. Is it at 900 odd crore or it is 920, 930 odd crore?
Mobilization advance is 900.
Okay, got it. And in terms of the current finance cost and the depreciation, so once this TBM, so for TBM depreciation will start in then the books from the Q4 itself or from 1Q 27?
So that depreciation should start from Q2 or so. Q2 or Q2
next year.
Next year Q2.
Not this Q4. Next year it will start.
That's why Q2.
Okay. Okay. So
It will be on a pro rata basis, so there will not be much impact.
okay. So current run rate of this 42, 43 odd crore will continue.
Yeah, around 45 crores should continue.
Okay. And then if, in terms of the finance cost also, as you said, that you will be maintaining that debt at 800 odd crore.
800
So that
crore.
current run rate, 38, 39, 40 odd crore, that run rate should continue. Okay.
You are right, Shravan.
Okay. Got it, sir. And thank you, and all the best.
Thank you, Shravan.
Thank you. The next question is from the line of Nishit Jain from SNJ Investments. Please go ahead.
Yeah. Hi, good afternoon, everyone. Can you tell me what is the current status of Warsaw Dahisar Coastal Road of BSC? Has the department received the High Court NOC?
So, there are various permissions, like stage 1 we have received, and stage 2 is also at the final verge of getting it. We have got the MPCB permission, we have got the CRZ permission. So now there are some tree cutting permissions which are awaited, and we have already completed 6 foundations also in the stretch which was on the roadside. So, and there are some additions and changes happening in the alignment, in the arms, because it's similar to the Haji Ali we have seen in Mumbai, which has multiple arms. So the IIT has suggested one more addition of a ramp in that, which we have submitted. So it's on the final stages where we should get the approval, and in the meantime we have started foundation and foundation works in part of the areas.
Okay, so for this casting yard setup, everything is already started, you mean to say?
The casting yard land is identified, and the preliminary works have started there.
Okay.
We have also got the approval from BMC for it.
Okay, thank you.
Thank you very much.
Thank you. The next question is from the line of Saurabh from Banyan Capital. Please go ahead.
Hi, just one question. What is the current non-fund based limits and the utilization?
So the non-fund based limit is around 5,000 crores right now, and utilization is about 75%.
Okay, thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Kamal Gupta for closing comments.
Yeah. So H1 FY26 was a period of consolidation and balanced performance. H2 26 will be a period of building momentum, scaling up execution, and moving ahead with greater speed and focus. We remain fully committed to creating sustainable value for our shareholders, partners, and stakeholders. Thank you for your continued trust and support. Please feel free to reach out to our IR team for any clarification or feedback. Thank you all.
On behalf of J. Kumar Infraprojects Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.